from Crypto Camacho, and I am back here with Roderick Spectro from Hypester, the founder of the Spectro indicator. What's up, Rod? How you doing?
Hey Dan, very good. What about you?
I'm good, I'm good. So hey guys, today we have something really exciting, and I wanted to just kind of jump into it, and I want to explain real quick what we're going to do. First, so everybody I think out there knows generally what Spectro M is, right? It's the main plugin, the kind of all-encompassing plugin that Rod and his company Hypester have created to help you predict and make moves in the stock, the Forex, and the cryptocurrency markets, right? So today I want to actually talk about Spectro, but we want to actually show you some of the additional plugins that you're going to be able to use if you get Spectro, right? So when you get Spectro M, which is this all-encompassing indicator, right? But you also get 5 different plugins that do a variety of things. Today, we want to talk specifically about the Spectro Oscillator because there's a certain way you can use it to help increase the probability of you trading successfully, right? And we're going to do a mini series of not only all of these plugins that you'll get, what they do, how to use them, so forth and so on, but then after that series, we're going to get into how to actually use some of the really specific and nitty-gritty features inside of Spectro M itself, right? So we're going to do a number of videos in a couple series here so you guys get a better understanding of how you actually use Spectro. So with all of that said, let's first talk about Spectro Oscillator, right? That's really what this video is going to be about. And first, Rod, why don't you just give us kind of an overview? You can share your screen if you want. You could tell us if you want, but just give us an overview of what Spectro Oscillator is. Like, what is it for? What does it actually do? What's it for?
All right. So let's start with the basics. So our main product, the product that sells most, is the Spectro M, which is basically this all-in-one solution that has mostly all of our technologies in one, let's say, a kind of off-road product, you know. And the thing that people like most is those things which are basically the direction change alerts.
Sure.
So here I'm using a more basic version, which basically gives you the warnings.
Mm-hmm.
So there's the most complete one, which shows you the alerts. So this is the way I trade. It's kind of conservative, so I kind of don't use the alerts here because since it's a very conservative setting, you see they kind of trigger, you know, a little, you know, slow for this specific thing because as you can see, those are 15 minutes contract. So, you know, you don't want to use very conservative, slow moving triggers.
Okay.
That's why I have like these specific settings. But then let's understand what the oscillator is about. The oscillator is kind of the brain behind the alerts. So you can show the oscillator here, you know, just play the oscillator.
Yep.
It's going to show, you know, where the alerts come from. So you can see this line appearing behind the price action here. And basically the interaction of this line with the price action triggers the alerts. If it crosses up, it's up. If it crosses down, down. And then you have those blue areas, which is basically the warning areas where the trend's kind of weak and it might change.
Got it.
They're faster, but not safer. The up and down, they are consolidated, right? They're safer. They're kind of, you know, confirmed.
Okay.
Whereas the warning, it's, you know, it's not a direction change itself. It's just a warning. It might happen, but it's faster.
So let me get this straight just to make sure I understand. So the red is obviously that it's going down. When the oscillator is red, pointing down, even if it's going up and it's red, it still indicates bearish, right? A bearish market and likely a downturn. When it turns blue, that means it's a warning that there potentially could be a directional change in the market, and the market may actually start to go up or down, right? Depending on the direction it's going. And then green indicates the bull run is about to start or has started, right?
Exactly.
Okay. So how would you actually use that? Like give me a scenario or walk through like an example of like when I'm trading, I'm looking for this X, Y, or Z. Like how do you actually use it practically, right?
All right. So it really depends on what you're trading. So this is a simplified version. Like we said, the Spectro M offers basically all of our technologies in one package. Mm-hmm. So if I offer you every single, you know, possibility of, you know, tweaking options and blah, 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 basically you would have like this huge panel with a bunch of numbers going around that the usability suck.
Yeah.
Like, to a point where the learning curve would be huge. So Spectro M, it's like a plug and play kind of thing. You deploy, I already give you, some pre-made settings, and you can kind of tweak it really fast, like the resolution and such. But they come from a bigger technology, and that's what the Spectro oscillator is about, which is our one of our new releases, and that's what we're going to talk about now, because basically what you're seeing here comes from this other dude here. Okay. This line, it's basically
real quick, Rod.
Yeah.
I just want to make sure people are understanding this, because so Spectro M is the main plugin that you get, and the main plugin you have to install with TradingView, right? That's what's on top here, and that's what Rod was going over, that in Spectro M, there's an oscillator setting, which is giving you that line that you see, the green, the blue, the red there. That's built into Spectro M. That's not the oscillator. Now, the oscillator he's going to show, it's a separate plugin, right, where he's circling there. We have M on top, and we have Spectro oscillator on the bottom. So I just want to make sure people are following that. So oscillator is this individual plugin. Cool. Keep going.
Yeah. But you see, the oscillator you're seeing here, like this thing here, it's basically the same mathematical model that is shown here. It's just I use a different type of thing. So the oscillator is actually related to the price, because as you can see here, this oscillator is shifting with the price. So at this point, this oscillator has the value of 3.5 thousand, whereas in the oscillator itself, the pure technology not related to the price action here, which is the same point, has a value of minus 30. So I had to change the formula a little bit, so it's actually related to the price, and you can use in whatever time frame, whatever market, So the Spectro M version, which has the oscillator itself, it's a little it's simpler, but it's more flexible and more robust.
Got it.
And now let's talk about the oscillator itself, because as you can see, if you open the M version, which is the all-in-one package, which has all the technologies, you just have those options here, basically conservative, aggressive, moderate, and you can just play the alerts, the warnings, or the oscillator or not. But let's talk about the oscillator itself. With its full power, I'm going to open its settings, and you're going to see that you have a lot more options on how it's deployed and how it's processed, and how you can have insights of what levels are good and what levels are not. For instance, talking about processing, I offer 5 types of processing. For instance, what is processing? Processing is the mathematical filter that I use to read the formula that I have, and that will directly change the behavior of the oscillator. For instance, right now I have a symmetric weight. What is a symmetric weight? Basically, I'm giving different weights in a moving average. So I give most recent data more importance than older data.
Makes sense.
Yeah, because I'm comparing newer data with old data, and I use like a weight. So it kind of, hey, the newer is more important because the behavior changes. There's a big problem that people think, one thing happened in the past going to happen again. It's not really.
So you're kind of using a weighted average to normalize the data in today's.
Yeah, pretty much.
Okay, that makes sense.
Yeah, and then you have true strength, which is basically TSI. Many people might have heard it. It's a pretty popular indicator. TSI. It's basically it has built in here. If you come here, TSI, you're gonna find true strength indicator. It's basically under formula. I'm not gonna get into the very specific technical details, otherwise we're not gonna get anything done. But basically, you're gonna see that as we shift, the processing methods, normalized, you're gonna see that the oscillator changes. And I'm gonna do like the classic one. So it's kind of easier because we had a dynamic pivot level, which was basically the Bollinger Band. So before, you could see that they oversold and the overbought levels, they kind of tagged along with the oscillator itself. Now they're kind of static. All right.
Okay.
We're gonna go through, why should I change it? When should I use it? So I'm gonna just use the classic one so you can kind of see the difference between the processing methods. So the first one, you see, symmetric, and then let's see the volume based, which is not so reactive. You see, it changes a lot.
Mm-hmm.
Or true strength. Oh.
Mm-hmm. Yeah, I can see how it's changing. And what is pivotal leveling? Just to kind of give us some insight into that, or do you want to ignore that?
Yeah, no. You see, one of the things I think people ignore most, it's the levels where you should pay attention to. All right, you see this line moving, all around, blah 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 blah. But if you don't give them the insight of those lines, this line kind of doesn't mean anything. It's just a line going up and down. So if you're a beginner, when you have those lines and you have a simple thing such as a red area or a green area, it makes you understand easily what it means. All right, so if it's kind of here, it's bullish. So let's see what happens when the price reaches here. You see, it's kind of a bottom.
Yep.
In the same way, when the price reaches here, it's kind of a top.
Yep.
So that's what the pivotal leveling gives you. It automatically gives you different types of ways to interact with the oscillator you have. For instance, let's use the volume base, which is a very safe one. It's one of the not so reactive, not so wild. For instance, let me show you the pure one. The pure one, it's the formula by itself without any sort of correlation, any sort of interaction with the asset you're looking. It's basically, price action data processed and, giving statistical probabilities all around the chart. So you see it's a lot more reactive. I think that's the best word. I could say aggressive, even noisy. But you see, when you change it to something that is related to volume, because volume doesn't shift so easily.
Right. Yep, I can see now.
You see, then look how the behavior is smoother.
Right.
It's calmer. So I like to trade with volume-based indicators.
Okay.
Why? Because I'm lazy.
Is it more conservative and more safe to trade with volume? It is, I would say, but do you agree with that?
Yeah, you see, volume hardly shifts, like this.
Yeah.
It happens, for instance, let's say, we're trading, it's Bitcoin here. Yeah. So Bitcoin, it's something very polemical. So you can have like let's say the United States Department of Justice, say something like, oh, Bitcoin's evil. And, if you have any Bitcoin, we're going to arrest you. Sure. So for sure that volume is going to drop, like boom.
Yep.
But that doesn't happen every day. So usually the volume follows like a wave that doesn't shift so aggressively. Yeah. So that's why I like to trade with volume, because I don't like to trade very polemical, very aggressive assets nowadays.
Okay, sure.
Even why you're asking me like, oh, but when should I use one or the other? Because I don't have so much time to trade nowadays. I'm not I'm diversifying my portfolio. I don't trade all the time now. I give some people my money so they manage for me real estate and such. So I'm not trading every day. So I'm making longer positions that take more time to change their behavior. Of course, they're less profitable than very aggressive movement. A very, very good day trader has more potential, to make money than, me. And that's obvious, and I'm not going to argue with that, because basically you have like, I don't know, probably dozens of good movements inside one day, especially if you use leverage.
Sorry, give me an example of like a swing trader. Like, let's say I was a swing trader. Let's say I want to try to swing trade every few days, if possible.
Sure.
and make decent profits. How would you use the oscillator specifically? Like what? I know you would look for the pink and the green, and just show a few examples because I want people to see how powerful this can be, and to keep in mind that the oscillator is one indicator of many that you can use, right? And the whole point of trading, not the point, but the whole strategy of trading is to find as many indicators as you can that are confluent with one another that the price is going to go up or down, right? And so
Yeah.
this particular indicator, I just want people to see how to use this because it's powerful.
All right.
It's predictable.
Yeah, it's the thing is it's simpler, and I think the simple the better kind of thing. And even though let's say you trade naked, like nothing on your chart, it's not so easy. People think it's easier, but actually there's a lot more information to be processed. For instance, candlestick patterns. I don't have the volume here, but volume is something that people completely ignore, and it's like super important. The wicks, those things are super important because they tell you a lot of history. What is going on this day, because you see this candle here, this one here.
Yeah, the wicks, yeah.
It has huge wicks, so it means that the price moved a lot within one day in several directions. That means uncertainty. And you see, it's very different from here. You see the wicks really small. This is not uncertain. It's pretty obvious that's going up. You see, there's a lot of information that you have to process when you're trading naked.
Yep.
So I think this is actually harder for beginners.
Totally agree.
And that's what I think an indicator makes your life a lot easier. Like if you're using a system like Spectro, the learning curve and the time it takes for you to be profitable, in my opinion, and from my experience, with the funds and the people I've taught, is that the learning curve and the time it takes for you to be profitable, to find good trades is,
Yeah, the one thing I like too about Spectro is that it gives you confirmation that what you're learning on the naked charts without indicators is actually valid. So you're kind of learning in two different ways. You're kind of testing your own assumptions of, okay, I'm learning candlesticks right now, and I think that because of these candlesticks, the price is going to dip, right? You could look at Spectro, look at the oscillator, look at other indicators and confirm that, with a high degree of certainty or a high degree of probability, right? So keep showing us specifically on the oscillator itself, like how you would use it, what moves you would make, like just as an example. It could be a simple example.
All right. So you asked me about swing trading.
Yeah.
So first things first. When you're swing trading, at least from my strategy, which is very conservative, I don't really like to trade reversals, especially aggressive reversals, or even spikes within a trend. For instance, you don't have to be a genius to see that this is a big downtrend.
Sure.
Right? So a lot of people try to, trade this move, if you call this a move,
Yep.
this and this. So this, for me, it's insanity. Okay? Sure. So the only one that's not insanity, in my opinion, would be this move. And okay, how would you know that? Because of this guy here. You see, I'm using like a volume-based with a Murray channel mathematic model to give me insight of what levels are important and I should observe it. So, all right. So you have like this downtrend going on. You don't know when it's gonna end, and down here it's on the oversold area, and then boom.
Yep.
For instance, this is an area that a lot of people would ignore, but this move here, when it moves out of the oversold area, this for me it's one of the triggers for buying in.
Oh, I see.
You see,
it dipped down in the green, but then it popped its head out. Yeah.
Yeah. So here, probably you would be stopped. And I don't think I would actually trade this because look, the moment it gets out, look, it's kind of here.
Right. Right.
So does it look like a good moment to buy?
Nope.
Yeah, even though you have a lot of indicators telling you that's going to go up, you can see that the candlestick is very unfriendly here for a bullish pattern. Right here, look, the peak here. But worst case scenario, you would buy in here somewhere and you would be stopped. And that's another thing that people should understand, that you'll lose.
Sure.
You know, part of being profitable, it's not winning, it's how you deal with your losses.
Sure.
So the first thing I would tell you, like, oh, I'm just starting to trade, the first thing you have to learn is like to lose small and lose fast.
Mm-hmm.
You have to be able to cut your losses quickly.
Yeah.
You know, I think that's the thing that changes everything. So once you learn how to, to let go easily, to be detached, to not be greedy, to not be stupid, to not be proud. All right. So let's say you get stopped here, whatever is your stop loss, your risk management rule. So you have another time that it pops out of the oversold area.
Mm-hmm.
And this area, it starts to get more interesting. Why? Because you have a divergence. You see, the oscillator is going up. Remember, this is a volume based. So it means that the volume is becoming bullish, even though it is still a price downtrend.
Right.
So what it means? It means that the volume always changes before the price.
Right.
Most of the times, but you see, as a rule of thumb,
yep,
the volume becomes bullish before the price starts to change.
Yep.
Why? Because the stupid people are panic selling, and smart people are buying the panic.
Mm-hmm.
So the buying volume becomes bigger than the selling. This is the first big signal, like, hey, this might be a reversal.
Mm-hmm.
Okay? So you have this divergency where the price is going down, but the volume is going up, and then you get this alpha and all these warnings, blah, 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 blah. So you can choose whatever you're gonna get in.
So, So pause right here, because I think you just highlighted something really important, and I think people should know. So there are multiple indicators right here basically predicting that the price is going to go up. And so just to call them out, to name a few, you have the alpha sign that he circled, that Rod circled right there. That's one indicator that, oh, okay, we're seeing a volume reversal. We're seeing a reversal now from a variety of stances, right? You see those warning signs right there as well. The warning signs are lighting up. If you know anything about candles, you see the candle at the bottom there. The candle is starting to turn, right, from red to green, and it's starting to actually kind of make a wick on the bottom there. If you look at his oscillator on the bottom, it's in the green, in the buy zone green, and it's diverging up, right? So I don't know how many that was, but I just listed off probably 5 or 6 indicators, all pointing confluently to a probable bull run, right? So I just want to make sure people understand that, because that's really, really important.
But still, I would not trade this or even this.
Fair enough.
And I'm going to tell you why. Because here's the thing. This middle line here tells you if it's a negative, a bearish trend, or if it's a bullish trend.
Okay.
Why? If it's under 0, it's bearish. So all this time that the line is under the middle line, this is a bearish trend.
Got it.
Hands down. So the time you buy those things here, you're trying to nail the bottom. This is not a trade that I like.
Okay.
And like I said, you're trying to trade corrections within a downtrend, because all those smaller bullish moments and movements that happen within the downtrend, they are still things that they just don't fit in my strategy.
Sure. Okay.
I'm just giving you an example of like what I've seen mostly. Like beginners, they want to trade, so they're basically trying to trade everything.
Yeah.
What I would trade is different. I would trade this. Let me show you what I mean. So you see what is happening here?
All the divergence up to the bullish side.
Exactly. You have higher lows.
Right.
This
price
is
going
what I
down.
like to trade.
Keep going. This is awesome. Yeah, this is perfect. Keep going. This is great.
Because this is a divergency. And that's like, oh, I'd like to trade a RSI, divergency, convergency, blah, blah, blah. That's what it means. It means that the Spectro oscillator correlated with the volume is telling you, hey, this is going up. And remember, what you want for a real trend reversal, it's not this move here. This is a correction, because it could as well do something like this, boom, which is expected, because what is going down tends to keep going down. All right. Whereas when these higher lows, they start to get close to the middle line, you see, that's when you want to trade. Because this bounce, it's the one most likely to reverse. Look, it's on the last channel.
That makes a lot of sense.
Yeah. But I'm pretty sure that you will try to trade this.
No, I would have. And actually, before you even said the next part, I would have, right? And you could have made a gain there, right? But I think the way you just described it is really powerful because the price is dropping, the divergence is going up bullishly, and yet the price is dropping. So it's gaining strength. And most people don't have a system like like Spectro indicator, so they're not seeing all this confluence. I mean, maybe they use their other indicators right now, but this is a very, very clear example of how to get in and when. So thank you. This is awesome.
And you see, this is a swing trade, and you're gonna see how comfortable this trade is and how long it takes for you to do it, and then you're gonna start to understand, okay, maybe that's kind of useful, especially if you have a job or if you do something else with your life, Like, I have to be fair, man. I don't like to trade. I don't like to do this stuff, but it pays well. So I just keep doing it because it really doesn't take so much time once you figure your system, your strategy out.
Yeah.
All right.
Well, okay. So that's great. I mean, so is there anything else with the oscillator? Because I do want to get into some of these other plugins. But do you have any like parting thoughts with the oscillator? Anything else we should know about before we?
Yeah. Basically, look for divergences, important levels. And you see, when you look at this last bounce here, first, this is 12 hours because we're swing trading, at one more time. So you see, this bounce here, when it crosses this line, this is my trigger here.
Yeah.
Which tends to be close to another indicators. And you have a warning.
Yeah.
And you also have an alpha. If you're smart enough, the way I trade, remember, I didn't have the alerts, I just had the warnings. So look, I trade the first warning within the area I judge more, more likely to reverse, which is this one. So let's see how this trade would work out. So you would get in here in the warning. You could even double your position once it crosses the middle line. And then also you have an alpha, which is another indicator. So you could, double up your position. That's something that I do a lot. And that's another thing that, newbies, they kind of ignore. When you're winning, you double up.
Yeah.
When you're losing, you double down. You cut your position by half, for instance.
Yeah.
So, and that's something that people kind of do the opposite. They bought something and it starts to drop, they buy more.
Yeah.
Does this work? Yes. But, for a non-profitable trader, doing this is like, like you're taking a beating, so you come like, okay, give me another opponent.
Yeah. Yeah.
So let's look at this trade here.
Wow, nice.
We're talking about 26% in 3 days.
That's awesome. Yeah. And you could do this. You could do this over and over and over again with the market as it moves. Like, and Spectro is $49 a month. I mean, it blows me away that, I love that we're showing these specific examples because these are real and they happen very often. So let's keep going. I want to get into some of the other plugins. Thank you. This is an awesome example. We'll come back to this. We'll do some more reviews of this particular feature, but let's move on. And thank you, Rod. Thanks for coming on Crypto Camacho. And